Ladies and gentlemen, welcome back to Vietnam Stock Market's Opportunities. It's an honor to have the opportunity to address such a distinguished audience. And if you want to open a legal trading account, please contact us with the email Vietnamstockmarket.entry@gmail.com. Telegram Vietnamstockmarket.entry with the phone number is +8491-432-6556. Or you can also scan the two QR code on the screen so that we can support you. And the other way to contact with us is please follow and subscribe the channel name Areca Capital Channel. The owner of this YouTube channel is Rika Hong Nguyen. She is our personal financial advisor. You can contact her with the email home.nguyen@vcsc.com.vn with the phone number is +8491-432-6556. And we always welcome you to our office on the 11th floor, 119 Đạo Street, Hoàn Kiếm District, Hà Nội, Vietnam. And the purpose of this video is to update you about SCS, Saigon Cargo Service. It's an air cargo terminal operator located at Tân Sơn Nhất International Airport. As of H1-2022, we estimate the company held a 40% market share of international cargo through up at SGN. SCS also leases airport apron of offices and circuit fields, all located on the same plot of land. And this is the report which was collated by Viet Capital Security about SCS. On the 7th November 2022, with the current price is 72,000 Vietnam dong, current target price 93,100 Vietnam dong, previous target price 99,500 Vietnam dong, upside to target price more than 29.3%. Dividend yield 5.6%, TSR more than 34.9%. Well positioned to overcome upcoming headwinds, we upgrade our rating for SCS to buy from outperform despite cutting our target price by 6.4% to 93,100 Vietnam dong per share. SCS share price has declined 18% over the past 3 months. Our lower target price is mainly due to our 0.8 ppt higher WACC assumption, which is partly offset by rolling our target price horizon to end 2023 compared to previously mid-2023. Moreover, we cut our 2022, 2023, 2024 forward net profits after tax MI forecast by 6.9%, 11%, 13%, as we expect SCS cargo volume to be weaker than 2022 to 2024 forwards due to a slowdown of global trade activities. For 2022 forwards, we forecast revenue to rise 8.5%, 8.7% year-over-year to 912 billion Vietnam dong, $37 million, which is mainly be driven by 2.4% year-over-year growth in cargo volume and a 5.5% year-over-year increase in average service price. Additionally, we forecast net profits after tax MI to increase 15% year-over-year to 652 billion Vietnam dong, so $30 million. We forecast 2023 forwards revenue of 1 trillion Vietnam dong, $41 million, more than 13% year-over-year, and net profits after tax MI of 718 billion Vietnam dong, $29 million, more than 10% year-over-year. We expect the top line growth to be mainly driven by 10% year-over-year cargo volume growth, while the bottom line year-over-year increase is partially offset by a higher corporate income tax. rate following the end of the 5% CIT incentive period at end 2022. We believe SCS looks attractive at a 2021 to 2024 forward PEG of 0.8 times based on our forecast due to its strong balance sheet and sustainable duopoly market position. Our current forecast and valuation conservatively assume that SCS will not enter long-term international airports, indicating that SCS share price is quite attractive despite not entering these new major airports. As such, we believe a successful entry into LTA would be a major positive catalyst for SCS. Downside risks to our positive view: lower trade flows, airport capacity constraints at SGN. Air cargo transport to face headwinds mainly due to softened trade activities in Vietnam from the global slowdown, as well as a faster plunge in maritime containers shipping prices compared to air cargo prices, which makes the latter less competitive. We've therefore cut our international cargo volume forecast by 5.3% in both 2022 forwards and 2023 forwards. Nevertheless, we believe SCS is well positioned to overcome headwinds in 2023 and forecast its international cargo volume will increase of 10% year-over-year in 2023 forwards, as we expect SCS to gain more market share at SGN. In addition, SCS management stated during a recent analyst meaning that the company is negotiating with a large airline client. However, no detailed information has been released. Our conservative forecast and valuation had not factored in potential upside from LTA. We assume that SCS total cargo volume will be plunged 25% year-over-year in 2026 forward to around 233,000 tons, equivalent to 102% of its 2021 total cargo volume. Due to the potential relocation of flights from SGN to LTA that year, SCS stated that the auction for an air cargo terminal at LTA will be held by the Ministry of Transport in late 2022 or early 2023. If SCS expands to LTA, we believe this will be a significant positive catalyst for the company. Please see more in our sensitivity analysis on SCS or 2026 forward cargo volume on page 7. Now we move to the 9 months 2022 recap. International cargo volume drives profits. Figure 1, SCS 9 months 2022 results. International cargo volume. VCSC comments. In 9 months 2022, SCS international cargo volume increased 16% year-over-year to 139,710 tons, representing 70% of our previous full-year forecast. We believe SCS 55,737 tons of international cargo in Q1 2022 was a relatively high base due to COVID-related disruptions in Ho Chi Minh City that began in H2 2021, which in turn caused a dramatic surge in demand for air transport in Q1 2022 due to its timing advantage. In Q1 2022, SCS international cargo volume cooled from its peak to 43,973 tons. SCS international cargo volume in Q3 2022 dropped 9% Q-off-Q to 40,000 tons, behind our previous expectation. Domestic cargo volume in 9 months 2022, SCS domestic cargo volume plunged 19% year-off-year to 33,217 tons, representing 68% of our full-year forecast and trailing our expectation. SCS states this sharp decline was mainly due to China's zero COVID measures and the closure of its border with Vietnam, which negatively impacted domestic cargo flows between Ho Chi Minh City and northern provinces cities in Vietnam. 9 months 2022 recap: revenue, gross profits, operation profits, and net profits after tax MI in 9 months 2021 is 406. 9 months 2022 is 489. And now we move to the 2022 forward outlook. Q4 volume should be weak, but we expect higher margin year-off-year to support bottom line growth. International cargo volume, VCSC comments. We cut our 2022 forward international cargo volume forecast to 188,828 tons, more than 8% year-off-year, implying a 9.5% year-off-year decline Q4 2022 forward to 49,118 tons, more than 23% year-off-year. Q4 is normally a high season for air cargo transport. We note that international volume in Q4 2021 was a relatively high base as Ho Chi Minh City reopened in October 2021 after following a strict COVID-19 lockdown, in turn boosting demand for air cargo transport thanks to a timing advantages. In Q4 2021, international cargo volume was 54,290 tons, more than 51% year-off-year and 23% year-off-year. Domestic cargo volume. We cut our 2022 forward domestic cargo volume forecast by 8.7%, mainly due to the ongoing negative impacts on domestic cargo flows between Ho Chi Minh City and northern provinces cities, as China limits border trading activities with Vietnam. We note that domestic cargo only contributed around 6% to 7% of revenue in 2018 and 2021. Revenue, air cargo terminal, and others. We raised our 2022 forward other revenue by 8.8% to 54 billion Vietnam dong, $2.2 million, 19% year-off-year, mainly due to higher than expected office leasing revenue in 9 months 2022. We believe strong growth in other revenue in 2022 forward is mainly thanks to a recovery from a low base. Net profits after tax MI. We cut our 2022 forward net profits after tax MI forecast by 6.9%, which is mainly due to low forecast for air cargo volume amid softened demand for export-import cargo. Our current forecast implies that Q4 2022 forward revenue will drop 2.5% year-off-year to 256 million billion Vietnam dong, 10 million US dollar, while net profits after tax amount will edge up 2.1% year-over-year to 153 billion Vietnam dong, 6.2 million US dollar. We expect margin expansion to partially offset the decline of cargo volume. Let's go on to the 2023 forward outlook. SCS is well positioned to gain further market share. We expect low-teen profit growth in 2023 forwards. International cargo volume, BCSC comments. We forecast 10% year-over-year growth in international air cargo volume in 2023 forward to 207,711 tons, which is slightly higher than management's guidance of 200,000 tons. At an analyst meeting in Q3 2022, management stated that SCS is negotiating with a large airline client. However, no detailed information has been released. We believe the upbeat international cargo volume growth guidance in 2023 forward partially reflects the expectation that SCS will successfully appoint these large clients. Domestic cargo volume, we forecast domestic cargo volume of 49,063 tons in 2023, slightly below management's guidance of 30,000 tons, as China has shown some positive signals to reduce its strict COVID restrictions. We believe domestic cargo volume will recover in 2023. Revenue, air cargo terminal, and others. We currently forecast other revenue to rise 7.1% year-over-year to 38 billion Vietnam dong, 2.4 million US dollar, mainly thanks to the office leasing segment, which is due to 3% year-over-year higher assumed leased and a 4% year-over-year increase average leasing price in 2023 forward. Financial income. We forecast a 40% year-over-year surge in financial income in 2023 forward, which is thanks to one, SCS improved cash position with its average balance in 2023 forward of 34% compared to 2022, and two, our assumed higher effective interest rate of 6.8% in 2023 forward compared to 6.5% in 2022 forward. Net profits after tax amount. We note the CIT rate of SCS air cargo terminal business will be increased to 10% compared to 5% in 2022 forward, as the 5% CIT incentive period will be end for the company at end 2022. Our net profits after tax amount forecast for 10% year-over-year growth is mainly driven by one, 13% year-over-year growth in operating profits, and two, a 40% year-over-year surge in internet and in financial income, which are cushioned by three, our effective CIT rate assumption rising to 10.5% in 2023 forward from 6.5% in 2022 forward. And now we move to the part named valuation. We value CSCs using the DCF method, giving it strong cash inflows and high cash conversion. We'll roll our target price horizon to end 2023 compared to previously mid-2022, and our 5 years DCF valuation to 2023 2027 forwards compares to previously 2022 to 2026 forward, which captures one, an expected increase in SCS corporate income tax rate from 10% in 2023 forward to the full statutory rate of 20% in 2025 forward. This increase is because the corporate income tax incentive for SCS air cargo terminal will end in 2024. And two, potential changes in the industry landscape at SG and after LTA is launched in 2026. We note that we have not incorporated SCS and anticipated second office building development due to low visibility on the approval and development timeline. However, we see potential upside to our valuation if the project receives final approval, as we believe demand for office rentals near SGN is high, along with the fact that SCS does not have to pay for additional and clearance or land lease payments. Figure 4, valuation summary. Figure 5, DCF valuation. Figure 6, cash flow summary. You can take a look on the screen. And the peer comparison selected peers for SCS are mainly regional aviation services players whose earnings are also exposed to other aviation services besides air cargo terminal operations. SCS is more resilient as the company only operates an air cargo terminal in addition to its sustainable duopoly market position. Recommendation history. Financial statements. And that's bring me to the end of my presentation about SCS. If you want to open a legal trading account, please contact us with the information on the screen. Hope you guys have a nice day and hope this video and some information will be useful for you. Thank you for listening and see you next time. Bye.